We're gonna whip up a killer scalping strategy using 3 free indicators on TradingView. This will help you rake in steady profits across all markets. Are you pumped? Let's dive into the indicator section and toss in the WaveTrend oscillator indicator. To make it work like a charm, let's fine-tune the indicator settings. This oscillator acts as our main signal generator. Here's how it rolls. When the green line crosses the white zero line upward, it's a buy signal. And when the green line crosses the white zero line downward, it's a sell signal. In this instance, the WT indicator has given a sell signal with a downward cross. Furthermore, after the downward cross in the WT indicator, a buy signal has been generated. Okay, here's the deal. To use these indicator signals effectively, you need to add some filters. Why? Well, let me break it down. Sometimes, like in this example, it gives us the wrong sell signal when the market is going up. And in another situation, during a sideways market, it goes a bit crazy and gives us too many signals. That's why we use filters, to clean up the mess and spot the trends better. So this time, add the MACD indicator to your strategy. At this point, just like me, adjust the indicator settings. So in this scenario, when you see green, that's a thumbs up for a buy signal, and when it turns red, it's a thumbs up for a sell signal. In this case, we had a sell signal, but it gets filtered out correctly because the MACD indicator didn't have a histogram. Then in the next example, we got another sell signal, but this time it was backed up by a red MACD histogram. The next indicator you want to use is called 10-in-1 different moving averages. After you add it to your chart, go ahead and tweak its settings just like I do. This indicator helps us avoid fake signals. When the EMA 50 is above the SMA 100 and both are going up, it means the market is on a bullish ride. So you should focus on buy signals to get into the market. On the flip side, if the EMA 50 is below the SMA 100 and they're both sloping down, it signals a bearish market and you should only consider sell signals to jump in. So here's how the entry rules for trading will go down. To enter a long trade, first, wait for the green line to cross above the zero line. Next, the MACD histogram should be green and above the zero line. In the next step, EMA 50 should be higher than SMA 100. And finally, both original moving averages should be sloping upwards. Now, with all these conditions met, you're ready to dive into a long trade. When it comes to setting your stop loss, you can either use EMA 50 or the recent swing low. And for your exit strategy, consider a risk-to-reward ratio of 1 to 1.5 as your primary trade target. Alright, let's dive into the entry criteria for a short trade. First things first, keep a watchful eye for when that green line crosses the zero line downward. Next up, make sure the MACD histogram is painted red and positioned below the zero line. Moving along, verify that EMA 50 is trailing beneath SMA 100. Finally, ensure that both of those original moving averages are on a downward slope. Once you've got all these conditions squared away, you're good to go for a short trade. When it's time to set your stop loss, you've got two choices. You can rely on EMA 50 or stick with the recent swing high. And for your exit plan, think about targeting a risk-to-reward ratio of 1 to 1.5 as your primary trade goal. But if you're not sure how to make money from the market using the easiest strategy, then you definitely should check out this video.